Are you feeling overwhelmed by your current mortgage or your loan payments and considering the process of refinancing? Does it make sense to refinance? How do you go through the process of refinancing? Well, that's exactly what we're going to dive into in today's video. We're going to give you a guide, if you will, on the process of refinancing. We're going to talk about the pros of refinancing, the cons of refinancing, and things that you absolutely have to consider if you're currently in that process. Now, I want to start with a very simple definition of refinancing, because last time I did a video like this, I called it Refinancing 101, and people said, you didn't tell me what refinancing actually was. So refinancing is the process of replacing a current mortgage with a new mortgage. It could be the same terms, if you will, with regards to a 30-year fixed, but it might vary. It might have a different loan amount. It might be higher. It might be lower. You might have a better interest rate. In some cases, you might have a worse interest rate because you pulled cash out or did something different. But essentially, a refinance is replacing your current mortgage with a new mortgage. And I want to be very clear early on in this video, for the majority of people out there at the moment, it's not going to make sense to refinance because many of you, nearly 90% of people out there have an interest rate below 5%. In fact, 70% of people have an interest rate below 4%. So the majority of you homeowners out there have an interest rate much better than where current rates are today. So it's not going to make sense to refinance. But this video is going to cover the topic when most people consider it, when you should refinance, as well as the costs that are involved when going through the refinance process. Now, before we get started, I'd like to take a minute and ask a favor. If you find any value in my videos at all, do me a favor and hit that thumbs up. Also, feel free to subscribe to the channel to stay updated on everything real estate related. So when do most people consider refinancing? Well, ideally, most people are looking for better terms in one way or another. They're looking to lower their monthly payment, or maybe they're just looking to lower their overall debt, or in some cases, they're looking to pull cash out and take that cash and do something else with it. But typically, people are looking for better terms, like a lower rate, a shorter term on their mortgage. Maybe they're looking to get rid of PMI or pay off some debt. Or in some cases, people have an adjustable rate mortgage and they're looking to get into a fixed rate mortgage. These are all different reasons people might consider refinancing their mortgage. As I mentioned earlier, if you currently have one of the rates, at the super low levels that we discussed earlier, it's probably not going to make sense to refinance. So lowering your rate at the moment is going to be difficult. Now, if you have a mortgage, for example, and you have mortgage insurance on top of that, then in some cases, it might make sense to try to refinance and lower that rate. And we'll talk about that when we talk about should you refinance. But I want to start today's conversation by talking about cash out, because a lot of people at the moment are looking to cash out of their property for one reason or another. Sometimes people are looking to cash out to pay off existing debt like credit cards, student loans, car payments, that sort of thing. Or in some cases, people are looking to pull cash out so that they can invest it in other things, stocks, bonds, even investment property. And then on the flip side, there's those that aren't so lucky. Maybe they're going through a divorce and they have to pull cash out to pay off one party. Or in some cases, you're paying off brothers and sisters because you received some sort of inheritance and you want to keep the property and pay someone off. So people are pulling cash out for that. And lastly, maybe you have a partnership with someone. You own a property with another person and that person wants out. And the only way for you to take control of that property is to cash out of that property, take that cash and pay off that other person. Those are all reasons that somebody might consider refinancing, especially when they're pulling out cash. But the real question is, should you refinance? And when I ask that question, the very first thing I want you to ask yourself is, what is your timeline on being in the property? And the reason this is important is because when you refinance your property, there's likely going to be some costs involved. Maybe you don't have direct closing costs from your lender, but you are going to have some cost like an appraisal. In most cases, you're going to have some title fees, some escrow fees. You're going to have to pay some various things on that property. And what you want to make sure of is that your time in that property exceeds the cost of that property. And what I mean by that, let's say that you're saving $100 on your mortgage, for example, by refinancing, but it's costing you $3,000 to do that. Well, that's essentially 30 months to recoup your costs. So if you know for some reason that you're only going to be in that property a year, 18 months, then it might not make sense to refinance that property. So I want you to start with the idea of thinking about your timeline. If you have a shorter time horizon in the property that you're currently in, then there's a really good chance it doesn't make sense to refinance. The second thing I want you to consider when asking yourself, should you refinance, is, are you paying off any debt? And with that, will your total monthly payments be lower? Let's say, for example, that you have $50,000 in credit card debt, and every single month you're paying $500 on that monthly debt. Maybe by refinancing and pulling that cash out, maybe your payment goes up $100, $200, but you're paying off $50,000 of, say, credit card debt, and you're saving $500 there. So yes, your payment's going up, but you're saving $300. In that case, it might make sense to refinance, but that's not always the right answer, because are you changing the term of your loan? Are you going from, say, a 25-year loan on your current mortgage, maybe you've paid it down 5 years, and then going back into a 30-year term in order to get those savings? That's something you have to ask yourself. Do you want to have a mortgage forever, or do you plan on paying it off in the future? Because oftentimes what I see is people pull out cash, they pay off debt, they go back into a longer-term loan, and then they end up running up the debt again, putting themselves back almost in a worse position because their mortgage starts over, they paid off the debt, now they have new debt, and their payment went up on their mortgage when they refinanced the first time. So they're just making it more and more difficult to pay off their mortgage and ultimately get to a place where they're free and clear, if you will. So just make sure, if you're considering refinancing, you're thinking about all of these things before ultimately pulling the trigger and saying, yes, I have to do it. Now, in some cases, maybe you don't have an option. Maybe you don't have any other way to pull funds and you have things that you have to pay off. In those cases, then maybe it does make sense. But let's use the example that you're pulling out money and you're going to pay off a car loan. Maybe that car loan is maybe 36, 48, 60 months left on that mortgage, and maybe you have a 3 or 4% interest rate on that car loan. But by refinancing, you're now rolling that debt into a higher rate and you're amortizing it over a 30-year period in many cases. So you're ultimately paying way more money for that car by rolling that into your current mortgage than you would be just paying it off on its own. So these are all things that you have to consider. Just because you're paying off debt and getting rid of it doesn't necessarily mean you're getting a good deal, because if you're rolling it back into your mortgage, then chances are you're paying even more for that debt, even though it doesn't feel like it. Now, again, I mentioned earlier that it probably doesn't make sense for you to refinance to lower your interest rate at the moment. But if you are thinking about lowering your rate or trying to lower your rate, I want to go over some times when it might make sense. So if you currently have mortgage insurance on your property, the easiest way to look at that versus current rates is take your interest rate. Say you have a 5% FHA loan, for example, and the mortgage insurance on that is 0.85%, because prior to them lowering it, that was the common amount out there. So in theory, you have an effective rate of 5.85% because you have a 5% interest rate, you have 0.85% on your mortgage insurance, so you have a 5.85% rate. Well, interest rates today on most FHA loans out there are sitting somewhere around 6.25%. So if you're comparing that to today's rate, pretty easy if you're just trying to lower your rate to look at that and go, it probably doesn't make sense to refinance. Or maybe you're trying to get out of that FHA loan and go to a conventional loan. Well, conventional loans today are sitting somewhere around 6.75%. So if you're looking at your 5.85 and you're comparing it to a 6.75, if you're just trying to lower the rate, you're not trying to pull cash out, not trying to do anything else, then it probably doesn't make sense. But let's say, for example, it does make sense. Let's say the rate goes down where the new rate is less than your current rate and you're thinking about refinancing. Well, you're going to go back and do something that we talked about earlier and try to figure out your cost benefit analysis, if you will. How much money is it going to cost you to refinance? How many months is it going to take you to recoup that cost? Are you going to have that loan for that many years? And that's going to help you decide whether or not you should refinance and try to take advantage of that lower rate. Now, clearly, this isn't as straightforward when you're consolidating debt, right? If you're consolidating debt, you can't just look at the interest rate and look at it going lower to determine whether or not it makes sense. So either way, when you're going through this process, just make sure you're working with a knowledgeable mortgage professional out there, not someone you found on the internet randomly or called some sign off, the side of the road. Make sure you have someone that has your best interest in mind. If you don't have that person, I have a link in the description below of somebody I know, like, and trust that can guide you through that process. They can run over the numbers with you. They can have the same conversation we're having here and ultimately tell you whether or not it makes sense based on your end goals. So if you need that person, be sure and check that link below. Now, if you've watched any of my videos before, I've talked about an easy way to figure out if you should refinance or not. There's a really easy formula out there that essentially you can plug in. All you need to do is know how much you owe on your current mortgage. And what you're going to do is you're going to take $125,000 and you're going to divide it by your loan amount. And that's essentially going to give you a percentage. And if you can drop your loan by that percentage, then essentially it probably makes sense to refinance. So in the example we're going to use here, let's say I owe $250,000 on my mortgage. Well, we're going to take $125,000. We're going to divide it by $250,000, which is going to tell us that we need to save 0.5% in order to refinance. Now, understand, the lower your loan amount, the higher the percentage you need to save in order for that to make sense. So if you owe $125,000 on your mortgage, well, when you divide that by 125, or 125 divided by your loan amount, in this case 125, that means you need to save a full percent for it to make sense for you to refinance. And as your loan balance goes up, you need to save less money. For example, say you owe $1 million. Well, if you take $125,000 divided by $1 million, that means you only need to save 0.1% for it to make sense for you to refinance. Now, don't use this as your golden rule, if you will. This is kind of a general idea for the most part. Make sure you're having a lender run the numbers, do the other things that we discussed in this video to ultimately determine whether or not it makes sense. Now, with that said, a lot of you want to know what costs are involved when refinancing. Now, costs are going to vary by lender. They're going to vary by state. They're going to vary by a loan amount. So a lot of things change depending on the numbers. So we're not going to talk specific numbers here, but we're going to talk about the general fees that you typically have to pay if you're going through the refinancing process. Now, some lenders might be charging you fees to refinance. They might be charging you origination points. They might be charging you processing fees. They might be charging you underwriting fees, admin fees, technology fees. They can come up with a name and call it anything, if you will, but this is essentially box A on the loan estimate. So if you're refinancing or want to see what a lender is charging you, just look at box A on the loan estimate. It's an easy way to compare lenders to figure out if you're being charged, what you're being charged, and be able to compare it to other people. So those fees are going to vary by lender when refinancing. Some lenders don't charge you anything at all, but even the lenders that don't charge you anything at all, you're still going to pay some things when refinancing. And those items include title, escrow. You're likely going to have an appraisal fee if you're doing a conventional loan. If you're doing an FHA or a VA, you might be able to do a streamline and not have to pay that appraisal, but you're also going to have things like credit reports. So depending on who you're looking at out there, when you're going through the refinancing process, there are going to be some costs involved. And that's why earlier we talked about figuring out your timeline, how much it's going to cost you to refinance to figure out if it ultimately makes sense to go through that process. So for the majority of you watching this video, at the moment, it's not going to make sense to refinance. Now, interest rates today are sitting somewhere in the mid to high 6% range. We're likely going to see interest rates move lower in the future. And as we see interest rates move lower, we're likely going to have a lot of you out there that have interest rates above that 5% range. There's going to be an opportunity to refinance. So just make sure you're going through the information we discussed in this video. Again, talk to a knowledgeable mortgage professional if you need one. There's a link below to get connected with somebody that I know, like, and trust. But either way, just make sure you're working with someone that has your best interest in mind. They're not just pushing you into a refinance so that they can make money off of you. Ultimately, there has to be a benefit to you in the process, but sometimes it doesn't make sense to even do that refinance, even in those scenarios, because of your timeline and other things in your life. But if you have additional questions about refinancing, want some more information, do me a favor and check out this video here.